Good afternoon, everyone. This is Brian Shannon speaking from Alphatrends.net. Today's Monday, the 23rd of January, 2012. Let's take a look at this market here. It was kind of quiet towards the end of the day on a closing basis. The S&P was up 7 pennies. As we know, we broke this downtrend line from the mid to late last week, and it'd be nice to see that we hold above that this week. I don't think it's imperative that we wanted to see held. That is, on Friday we had seen this. And by the way, we're looking at Realtick charts here. Realtick I use and the charts that we're looking at. Go to realtick.com and take a look at the many different brokers that offer this application. Excuse me, the Realtick application. Whether you're an institutional or individual investor, it's a great platform to look at. But the S&P 500 remains above that 5-day moving average and right around that 131 level that we were talking about last week. So 131 right now is our short-term level of support. It's possible that we have a lower high here, and breaking that 131 could lead to a little bit more of a sell-off, as again we're getting a little bit extended here. We have been getting extended, so perhaps maybe a move down towards the 10-day moving average at about 130 wouldn't be unreasonable to expect within the confines of just a normal pullback within this uptrend. It would get us down to that trend line that's really been the essence of this recent trend. And of course, when we back it up a little bit further, we know that we have this inverted head and shoulders pattern that we had spoken at length about, which still measures out to much higher prices. Not that we really want to focus on that, but we are within a bullish pattern here. And near term, you want to focus on that 131-ish level, and below that, probably down just at 130 even. So the Nasdaq, as we know, had broken out to multi-year highs. In fact, decade highs. It wasn't since 2001 that we've closed up at these levels. So we're in a strong market in the technology stocks as well. And don't forget, we've got tons of earnings coming out this week. So don't be complacent with the individual names that you're in. Be aware of when they're due to report earnings, because you can still get blindsided. A lot of them obviously have been doing well, but at the same time, there's other stocks that have been that have been and will implode on negative earnings, responses to negative earnings. So, and not necessarily negative earnings, but what's perceived as, at least relative to what's expected. But we have a strong market still. We're pausing here at least for a day, a couple days. We did close above that 59.5 level. We were talking about 59.5 is our first important level. We had a bullish start to the day, which was kind of a continuation of that late day strength on Friday. But you can see here in the Nasdaq and also on the 1-minute S&P 500 that when we broke those volume weighted average prices, we dropped, created a perfect little bearish flag, a continuation, another consolidation, and continuation down, in this case, to daily S1 in the SPY. But we did, in both of these markets, get back above and close above the daily volume weighted average price. Excuse me, on the NASDAQ, we closed just below it, actually. So, not necessarily viewed as a negative, but back below 59.50 for more than a half hour or so in particular, then we run the risk of maybe that we're going to get a little bit deeper pullback, and perhaps to that level that we've had our eye on at about 58 and a half. A move down to 58 and a half would kind of put us near this trend line as well. Now we've this rally has sped up a little bit here recently. As you can see, we're spending more time at the higher end of that boundary, but we're not breaking down, so it's still not time to rush in and say, oh, this market's overdone, it's time to sell short. A lot of people have been doing that and arguing that it's due for a pullback and that sort of thing, and the market just doesn't agree right now. The Russell 2000, this is the essence of its trend, and that's also right there with that 5-day moving average on this 30-minute time frame. The daily time frame, of course, we had seen the the levels from mid-November broken, and we remain above that level. That's right now where we see that 10-day moving average as well. So the 10-day moving average in this trend line, right in here at about 77 bucks, is our first bigger level that we would want to keep an eye on. That is if we break below this 77.50. So breaking below this 77.50-ish level, I think a test of 77 seems likely, even 76.80. But again, there's nothing bearish about this, these daily time frames. And the semiconductors, which had been the leaders obviously last week and gotten a little bit extended here, they continue to behave well. They were flat today. When we take a look at a horizontal trend line, it looks like this, and this is this 34 level that looked like it had the potential to become resistance up near about 34, 34.05. But again, remember that the way this market has been behaving is, we had broken resistance and resistance had become support. We had broken resistance here. So, if we get a pullback down even towards about 32.5, I don't think it would be devastating to this market. Of course, it would have us below that 5-day moving average, but I don't think it would be anything more than a very short-term opportunity to trade the short side, and only for the most aggressive traders, because we're still in an uptrend, and fighting that trend just doesn't make sense, even when you say, well, we're extended and that sort of thing. The financials are up at the level that we've been kind of looking at, which is that $14.20 level. We were talking about, a lot of people were focused on the 200-day moving average and the trend line and looking for short sales in that area, but the market continued to hold last week above that $13.60 level, and that's what we've been focused on. Is this market continuing to hold above key levels of support, and what's the direction of those support levels? In other words, we've been having these higher lows at key levels. Now, the level we want to really watch this week, so far it seems like still is about $13.95. If we break below that, I think a pullback down towards 13.5 wouldn't be unlikely or unreasonable for this market to do. If we kind of take a look at the trend line, you can see that's giving us a little bit more importance in there as well, because we have this uptrend line that's been tested, and the basis of these higher lows right in here right now at that 13.95 level. So the fact remains, we still are in an uptrend here over the intermediate term. It remains innocent until proven guilty. Of course, things can change, and they often do quickly, so be aware of where your risk is and what you're willing to accept. And in terms of new entries here, again, I'm going to repeat that what I've kind of been saying is that you've got to be, when we get extended, it's not time to be short, but time to really just be aware of entering new positions and maybe trading smaller share size, because eventually we do get a pullback when we're in these types of, after we've seen this type of rally, but there's just no evidence of it yet. So don't make it more difficult than the market already is by trying to guess. Wait for the evidence to tell us when it's time to maybe take those short side trades, but it's just not now.